Your mortgage and the way you pay it is the most important part of your financial life and has the greatest effect in determining if you'll have a $1 million retirement nest egg or just a paltry rainy day fund. As a homeowner, the way you pay your mortgage will make all the difference between retiring with so-so retirement savings or enough money to give you a long and happy retirement. First, we have to talk about the way mortgages are calculated. Mortgage arithmetic is based on the amount of the loan, and home buyers are focused on the amount they need to borrow. Because of this, they seldom consider the actual cost of the loan and the amount of money they'll pay. Instead, they focus on the monthly payment. Few people consider the long-term debt they're taking on when they sign the mortgage papers, which of course is actually far more than the amount they're borrowing. When home buyers receive approval of their mortgage application, the lender sends a letter saying, "Congratulations, you've been approved for a $280,000 mortgage," or whatever the number is. They never say, "Congratulations, you've been approved for a $490,000 debt that can obligate you for 30 years of payments and take up most of your income during that time." Mortgages, like cigarettes and pharmaceutical products, should carry warning labels. Mortgages are also offered with an innocuous-sounding low interest rate. Even in today's low interest rate climate, that wouldn't raise alarm in anyone's mind. But what if you knew the actual interest you'd pay was something like 225%? I mean, who in their right mind would borrow money with such a high interest rate? No one. But let's look at the difference between mortgage payments and purchases you make using your credit card. Now, in credit card purchases, you only have to pay a monthly minimum. But for your mortgage, you have to pay a fixed monthly amount. Multiply the monthly fixed payment by the number of months, and you have the exact amount your mortgage will cost. The moment you sign for a mortgage, you know how much you'll pay each month. But what you don't realize is how much you can reduce the real cost and greatly increase your net worth and the size of your retirement nest egg. Using the same formula used by mortgage lenders, I'm going to give you an example of a 30-year, $280,000 mortgage at 4% interest. In the first year, you'll pay off a little under $5,000 of principal and just over $11,000 interest. Now, what if you used your credit card to make a purchase for $5,000? Wait, let me ask you a question. What's the highest interest rate credit card in your wallet? I'll bet it's less than 30%. But if you made your purchase using a 30% credit card and you paid off your card balance in 12 months, how much interest would you pay? I've done the math. You'll pay about $840 in interest on the credit card. Compare that to the $11,000 of interest on the mortgage. That's a huge difference in interest cost for paying off the exact same amount of debt over the same period of time. Now remember, we're talking about paying off $5,000 over 1 year. One by making a credit card purchase and the other by a mortgage. Still, it's the same amount of debt paid off over the same amount of time. It's really amazing when you think about it. By the way, the interest in the first year of paying down that mortgage is 225%. You're paying $10,000 more interest on money that you borrowed on your mortgage compared to a credit card purchase. I know you can't believe it, and you're probably saying, well, one is a credit card and the other is a mortgage, so of course there's a difference. But there's no difference. It's the exact same amount of debt. What if I told you that you can pay the same amount of interest on your mortgage as you would a credit card and save over $10,000 in just 1 year? That would make a huge difference in the amount of money that you could save, that you could use to grow your retirement. In fact, helping people save tons of money on their mortgage is a key part of the Mortgage Magic system. A system that grows your net worth and puts you on the road to having a $1 million nest egg. You can learn all about it in my book, Essential Steps to Retirement Security. Second to the Mortgage Magic system itself, it's the best way for you to learn the secrets you need to know to grow a retirement nest egg larger than you ever thought possible. Make sure you get your hands on this book. If you haven't already sent for your copy, be sure to get yours today. you can forget about being able to retire if you ever face foreclosure. Don't let foreclosure happen to you. Learn to avoid foreclosure in my next video, Essential Steps to Retirement Security.